Hello and welcome. It is the completion of the 10th day of October 2019, that of a Thursday. My name is Derek. All bets, trades of the like within each his own risk and their own reward. Start off within silver, gold, stock market. I haven't even looked at the stock market, but it'll be quickly and go over a brief rundown on the markets. As on silver, 1740 was hit as support right on the nose earlier today, but just continuing to be in this correctionary mode from this last move. There's really not much to go over until something significant happens, and it's not happening yet. Gold remains insignificant, supporting extremely well at around 1488. We're coming down towards that level now. So far, supporting around a little higher than that now, but it's still in this holding this move consolidation pattern, and that in itself is a strong top point. But it was back to like August the 7th when this thing was up to this level, and with the exception of this much longer failed breakout spanning through August 23rd ending September 5th, and the much shorter failed breakdown from September 30th to that of October 2nd, the prices remained in the range of around 1488 and really to this upper area of about 15 and a third. So until something happens, it's just going to be in this sideways movement. But the fact that it's holding here, it's just holding and staying within this area. That's a bullish signal. I look at it as going forward. And the Dow Jones, I guess the sound was cutting off when I did this before. Basically, one of the key things that I was noticing about this was this is the same situation we were in here as it was leaving the 18. Same situation in here. That is, you leave the 18 from like being in a bull market, like being above it kind of deal. You make one leg below it, and then your first correctionary move. So it happened in here. It happened in here. So this had choppy action moving forward. This had one leg lower. And a situation here, you had this one in here, and it had a little bit of a move higher. And that's been the case, of course, since the 2019 rally, which is really, I don't know how you want to sending triangle. I mean, it's kind of made a higher high than a lower low, but it's still, if you look at the completion of this uptrend and how you want to do this, there's still a decent amount of time filling this empty space. Still, but that's too much time now on the Dow. Let's move on to Bitcoin. And amongst this, on the daily chart, after having several hits at the 77 level, and it's an interesting spot because it works out to about a 50% retracement. I'm not going to say Fibonacci retracement because I don't know how you calculate Fibonacci in a 50% level, but still 50% retracement from the key points. And in doing so, it was looking like, okay, we're either going to most likely make a move to this next level here, or we're going to be having the typical failed breakdown, which is looking like more favored, I suppose, now. And it's just, we're at the stage where, okay, why didn't we resist when we were supposed to be breaking down? We had this unusual big up day a couple days ago on October the 9th, or yesterday rather. Uh, don't know why we got. Yeah, October the 9th, yeah. So that would have been, because this is technically now the 11th. That makes sense. And price action today was just a hold and stay above, staying above the 18 average of highs. 18 is now flat. I don't see stage number two anything of like a statement of like, okay, we're ready to get this into a bull market because it needs to have a move much higher than this to announcement to where the 18 average of highs is. But the fact that it's holding, staying, it's showing bullish signals, I would think, just on that level. But short term, I mean, this thing could easily falter, but I'm always liking the 18 lows as my indicator to look at to tell me that it's a failed move. And it still has a decent ways to go. For that's at like, well, it'd be rising as we move to the next few days. So high 81. A 5% loss would take it to the 18 lows in a key area. I'd be like, okay, this is big. If we falter from here, we're looking at fast move to 6,000 change. But the more we look at this, okay, if we can establish some more shorter term resistance levels, then maybe from that point we can start to see that we can get above those key levels. And so what have we established? Well, we first came up to 87 on the first level. It has not been making any higher highs since. It has been lower, but it really hasn't been making much for lower lows either. 8,700 was this high on the 14 stamp, and then the 3 a.m. stamp in earlier today's session comes to 8,650. The 17-hour stamp today comes up to 86. And support, which was originally established and is currently being tested right now at 85.35, has been upgraded, or whichever term you want to use, extended down to the test we had from 84.50. And this was a statement or attempt to try to break this market down, but it has successfully corrected the whole time because it did break down below this lower level of support. So that's been one attempt to break a range, and in doing so, I'm now looking at this as the extended part of the range, which is normal within market conditions. And any break of the short-term one, well, that's the next level, almost like a floor is in a building. This would be one floor. Now we got another floor around here, and then I definitely would put an upper floor that would resist or have a ceiling towards this high. Of course, there hasn't been really any major attempts in the breakout. The only real one was earlier in here, but it didn't do much, but just barely get above the highs and just congest with it for about 3 or 4 periods on the single hour.